Alright YouTube, Stocks by the Numbers, welcome back. Just wanted to do a quick earnings after hours update here on two companies that I know we looked at just about 3 weeks ago. We had earnings come out, now we're moving after hours. Let's see what's going on. First company I wanted to look at is IONQ, ticker symbol IONQ, listed here on the New York Stock Exchange. Stock closed today 11.41, down 6 cents, about 0.5% here on the day. As we see after hours, up 29 cents, a little over 2.5% here. And if we come out and we look at the earnings here, we can see a big miss on the profitability side, missing by about 24% of estimates. And on the revenue side, the company comes in about 1.13 million above analyst expectations, posting 6.136 million. Honestly, I wasn't really sure what was going to happen, but I remember looking at the overall view of the company. It was back here on Friday, October 13th. And as you see, stock was, 1440, 1450, wherever it was when I made the video. And as you see, really over the days, it completely pulled back down to about 9.25. Then we went on this rally, and that's basically what I say with a lot of these companies, especially if they're overvalued, right? I would give my opinion basically saying that the stock would continue to sell off over time, but I always say that the stock is usually going to go on a little bit of a rally and gain some momentum going into earnings on that anticipation. As we see here again, the company did beat on the revenue side, which is a good sign. And if we look after hours, we can see the stock immediately spiked all the way up to 12.45 and now has since pulled back. Now it's at 11.68. Overall, if we want to draw our trend lines here from absolute bottoms to the absolute tops here, this technically is a symmetrical triangle, which means it can either break upwards or downwards. And I know there were a lot of positives here. I know sometimes some of these news articles don't pop up, but as you see here, Q3 earnings revenue up 122%, bookings growth, raised full year outlook, and more. 6.1 million on 5 million. But again, regardless of any positives that this company does have, and believe me, it did sound pretty positive. I know the profitability side is in question, but I do always say when it comes to these smaller companies, in their first stages of infancy, so to speak, it's really more about the revenue. Are the public, are other companies out there actually valuing this company's product and service, and are they looking to give them business? And as we see here, again, beating by over $1 million. So I know some people may have been betting against it, but the revenue did come in above expectations. But this is the problem again. This is why I said it really doesn't matter. This quarter that they posted 6.1 million on 5 million. Okay, great, fantastic. But at the end of the day, even if the company posted 30 million and completely annihilated those expectations, in my opinion, it still has to go lower. And as it was continuously dropping from the time I made the video all the way down to 9.25, in my opinion, that was 110% justified. Because again, I know everyone wants to pile in and give a stock like this the volume based on potential future growth. I can completely appreciate that. But remember, if you see a little bit of movement in the short term, again, like you had the spike up here, but if you're holding longer term, right? If you turn around 2 years from now and, it went up a little bit from when you bought it, but now it's down like 50%, then if you really think about it, if you were planning to hold this for 5, 10, 20 years, basically you kind of tied up that money for 1.5 to 2 years for absolutely no reason. Because you weren't planning on selling it anyway, right? And the company itself isn't kicking ass and taking names to a point of, compared to something like an NVIDIA, where it just continued to grow, the stock price, grew into several hundred, and they wanted to, enact a stock split. It's not going to happen the same way with a company like this until they really start rocking and rolling and bringing in, 5-6 million. Again, coming in above expectations, that's phenomenal. But you can't tell me a company that makes, 18 or $20 million for the year is worth 2.3 billion. And then, of course, people, anytime I look at revenue, they tell me, oh, it's not just about revenue, it's about earnings. All right, well, this company is bleeding, and they're basically consistently missing on the EPS side for several quarters now, the last 3 in a row, and that means they're losing more money every day than anticipated. than expected. So that's why, regardless of any positives the company is holding, I still am actually very negative on this stock from the time I looked at it. Where are we here? The high on this candle, 2160. So now if we come down like that, and we're meeting right there. Hold on, let me take off these trend lines because they're throwing me off now. But even backing out like this, that's what I mean. Like, yeah, we could have an initial pop up to 1260, and it went to where, like 1245 or something. So it already popped here, and now we're down at 1165, right? So we pulled back down, back below this fib level here of 1228. So that's what I'm saying. Even if it like slightly rises here and climbs up for the next couple of days, going into next week even, chances are, based on this resistance line here, this trend line going back to, in my opinion, these fake highs that everyone brought it to back in September, basically you're probably going to see a rejection, and now we're seeing lower highs and we're seeing lower lows, meaning that we will continue downward. And yeah, something like this fib right here, 796, definitely feasible in my opinion. Not even a doubt in my mind. In my mind, looking at a stock like this, I mean, the stock could probably crash all the way down to like $2, and it would still be potentially viewed as like fair valued. So, again, chances are they're probably not going to tank it back down to $2, $3. But see, this is what I'm saying. For a long-term situation like this, I spoke about this pump last time, right? You guys, for over 9 straight months, you pumped this stock up from $3 to $21. And if you didn't sell in this time frame, now this is all on you. That's the point I'm trying to make. Now, like, you're locked in, you're thinking you got a good price here at, like 7 or some shit. And, chances are it's probably going to slowly sell off over time. And you're going to turn around a year and a half, 2 years later, and you may be in a potentially worse or even, best case scenario, the same situation you're in, which again leads me back to my original rule of pricing and timing. Don't just pay into a situation just hoping for the best. If you bought in early 23 and your cost basis is like 436 or, 549, right? Something like that, then I can understand the fact that you're just holding and you're not going to sell the position no matter how much you're up here in the short term, and, you're waiting down the road for several years. If you bought this, again, several months ago on the hype, if you're in now at $14, $15 a share, that's what I mean. The company just beat earnings technically on the revenue side, and they're growing on paper, but now you're still down. And this is what I mean when I talk about pricing and timing. Give it some time. There is no urgency, in my opinion. Let it sell off. I'm glad they came out with some positives here on this earnings report, and it does look like the company is slowly growing. But again, with everything that's going on, $2.31 billion market capitalization, I do not agree with that at all. We can easily drop 50% from here. So, in my opinion, I see no urgency. Let's check back at the fib at 796, and then we can check back in at $5 and change, if you ask me, in my opinion. I really do think it's going to sell off. Switching over here to stock charts quickly, because I want to take a look at LAZR as well. And as we see here, really started to chunk down, got below that 200-day moving average, retested, and obviously we kind of, in my opinion, had like this little fake market pump that's been taking place for about the last week and a half, so that helped bring the stock up. But mid-Bollinger Band here on the daily, 1192, and right now after hours, 1161, so it has jumped up and now rejected off of that 1228 fib, and also the mid-Bollinger Band of 1192, meaning, in my opinion, next stop back to the 200-day moving average of 1047. I understand the MACD has crossed to the upside in the last couple of days, but again, it was the random, in my opinion, fake, optimistic little rally that we've had in the last week and a half that really helped move these indicators upward. So, in my opinion, I think it's just going to give it all back. RSI sitting at 43, switching over to the weekly. We can see RSI a little over 47, kind of trending downward. It had the bounce off of the 50-day moving average here of 937, right? It dropped to 924 and then kind of bounced back up. But as you see, it kind of continued like it was trending downward here with the red candle. And That's why I feel like it's definitely going to come back down in the immediate short term. Bottom Bollinger Band 991. I think that's feasible. And again, look at how drastically you guys brought up the MACD, and that's what I mean when you take useless companies or companies that only make a couple of $1 million a year, and then you bring them up to insane heights of multi-billion-dollar corporation valuations. Like that's what I mean. It's you don't have to be a rocket scientist to see that what you brought up that high is going to come back down. Let's look at Luminar Technologies very quickly. Let's go back about a month, and where are we? October 16th. Yeah, right in here was where I made the video, I believe, for Luminar Technologies a couple of weeks ago when we looked at it. And as you see here, north of $4 a share, 4 and change, and we pulled all the way back down to $3 even, and have since been bouncing around. So obviously, if you were interested in this stock, you watched my video and then you took my advice. I basically just saved you a 25% haircut, and hopefully if you did step in, you at least paid down in the low 3s as opposed to the low 4s, which is basically what I preach. I talk about pricing and timing. So Luminar Technologies, LAZR listed here on the NASDAQ, stock 368 at the close, up 12 cents, about 3.33% here on the hype of these earnings. And the stock now after hours, $3.27, down 41 cents, a little over 11.1% here after hours. Supposedly has a year-end goal of adding at least $1 billion to the order book. I wish them the best of luck with that. And they're expecting the fiscal year of 2023 revenue to be around $75 million, which is kind of in line with what we were expecting here. But again, I always say it comes down to the earnings. The revenue. And as we see here, the company posts Q3 revenue of $17 million versus street estimates of $19.6 million. And that's what I'm trying to tell you guys. That's why a stock like this is getting beaten up. Because number one, overvalued, right? We come down here again, basically very, very similar situation. Where is my earnings button? Yeah. But basically, very, very similar situation here, just like with IONQ. We have a company that's, 10, 12, 15 million a quarter, and for some reason it has a market cap of $1.43 billion. Now, I appreciate the fact it had a little pump today on anticipation of these earnings. I basically say that, again, to reiterate, on random Steam friend, but I basically say that on basically all of these smaller cap stocks that we look at. Most of the time they are overvalued. They got pumped up for no reason. They need to sell off and come back down to earth, and then maybe 2 or 3 days before earnings, that's when they'll do a little U-turn and gain a little momentum on the anticipation that they do beat estimates. But of course, as we just looked, the company misses on revenue by over $2.5 million. Look at this, lost $134 million just in Q3. And this is what I'm talking about. This is why I say when you have stocks like this, in its current situation, okay, please don't jump down my throat and tell me in 10 years how great the stock is. I'm talking about in its current situation. These are the types of stocks that, again, if they could bring down, they will bring down. Don't give them a reason. And this company has reasons. Market cap a little too high, in my opinion, losing over about $1.50 per share. Again, just look at these numbers here. It brought in 16 million last quarter, lost over 140 million to do it. And that's what I mean. The company just said they brought in 17 million. So they're growing slower than analysts anticipated, right? Because they were supposed to post almost 20 million, but they only posted 17. And to make that 17, they lost $134 million. So I'm glad that, these losses, you could say, are slightly starting to narrow. But also at the same time, the company just needs too much time. And again, for 2023, expecting revenue of $75 million. Yeah, again, if you had a company making $75 million for the year, no one's going to pay you 1.5 billion for your company if you're making $75 million a year, right? You don't have to be a rocket scientist again, and that's basically what's happening here. And that's why when we first looked at it, even at 4, I knew it was going to go down to 3 and probably into the 2s, and that's what I mean. Sitting here, at 320 now, taking a very big haircut. And if we back out here, we can see that chances are it is most likely going to drop down back to this 310 fib level and then potentially continue to drop down and even get down to 239 there, that bottom fib level there. And again, that's what's really hurting these companies. I spoke yesterday in previous videos just talking about the consistency that these companies have to report and the consistency in which their business has to grow to support these overinflated stock prices. And when you have companies just, one quarter we're hitting, one quarter we're missing, now this quarter we were very profitable, or next quarter, revenue missed by 30% or something. It's the inconsistencies that are going to drive the stock down, and that is why, again, as you can see, the stock has basically been in a steady downtrend. Yeah, these lines get messed up. Sometimes I have to throw the log on, the log off. I don't know what happened here. But basically you can see, again, that stimulus money came in, everyone took it to the moon, and the stock's been in a downtrend now for almost 3 straight years. So, that's what I mean. That's what I mean. You can't fake the fundamentals. As much as traders want to read the technicals and try to, people on Wall Street bets want to try to force these short squeezes, at the end of the day, if the fundamentals do not match what you're trying to do, it's only going to be a matter of time before she comes back down to earth, snaps back to reality, and leaves you holding the bag. Just think of 2 years ago how many people bought this. Look at this, 22, 17, $14 a share. Now it's at 3, right? And everyone thought that they were going to take over the world. Why? Just because it was some, EV tech stock that was trending or some shit. It's just, in my opinion, it's definitely not the way to analyze these stocks. And you guys probably work very hard for your money. So to just throw it into these overvalued positions and piss it away, in my opinion, to just have it slowly decrease and deteriorate over time is very foolish. And you should take a minute, take a step back, and reevaluate your situations and all your positions. Here we had the MACD dropping, looked like it was trying to curl here on this pump, but obviously that's going to head back downward. RSI 33, I'm sure that'll hit 30 and even potentially break, as we had back here and even over here slightly recently. So I wouldn't use the 30 RSI benchmark as a leading indicator. Random ad right there. The MACD has crossed recently again. In about the last week or so, it crossed up. Again, in my opinion, I think this was a fake optimistic pump here that we're seeing in the markets, and a lot of stocks moved in a way that they shouldn't have. And in my opinion here, we can see they brought it and rejected, but they brought it and kind of hung it out right near the mid-Bollinger Band, which again, I mentioned, as we see here, consistent rejections on the mid-Bollinger Band for several months now. So that's why now, with earnings coming in light, it will, in my opinion, definitely reject and back down to the bottom Bollinger Band there, sub $3. RSI was climbing almost 46, but obviously now, with some negative news coming out, all of that's probably going to reverse. And I'm going to end it there, because I just wanted to look at those two companies. So, once again, stocks by their numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. I'll try to do little updates like this on these smaller cap stocks. I'll look at brand name companies, and if I have any calls in the Discord in the short term, I'll try to call them out for you guys. And, I'll do all of that. All I ask, do me a favor, push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I always say, I understand markets are rocky and volatile and uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next one.